Price blocks for ONGC.
RBI has approved the reappointment of the MD and CEO Sanjay Agarwal.
Suddenly, in the last 10 minutes, markets have fallen close to about 30-40 points.
Pulled up banks and other lenders for instances of overcharging borrowers.
Mid-caps relatively faring better, so the mid-cap index is flat. Good afternoon. That was the day so far. Hello and welcome to Closing Bell live from the CNBC-TV18 Motilal Oswal studio. I'm Reema Tendulkar. With me is Surbhi Upadhyay, and we've got Nigel D'Souza, not in the newsroom but here in the studio. Hi, Nigel.
It's a pre-weekend special with Nigel in the house.
Well, that's right. We just got 55 minutes and then it's our long weekend that we're looking forward to.
Almost.
Till 3:30, we'll track markets. Post that. I know who's the party girl. The party girl is out there. But it's a good session, guys. I mean, we were down earlier in the session, but a good recovery.
Absolutely. I was preparing to say that, if it wasn't for the technology names, markets would have been in the green for the 9th consecutive day. But looking at the way the markets are recovering right now, 70, 80 points from the day's low, it looks like we might just end up in the green by the end of it. Look at that intraday chart. The low today was hit sometime around 12:15, and since then, it's been a one-way up move, getting towards at 17,800 mark right now. Banks are leading from the front. So the Nifty Bank is now piled on 350 points in terms of gains. And it's individual names like Kotak Mahindra Bank, ICICI Bank, Axis Bank, they've all moved to the high point of the day. Big moves coming through in these banking names. IT continues to sulk in trade after TCS missed the mark on revenues and margins. Across the board, you are seeing a sell-off in IT names. And IT in itself, that contribution plate, I think we got that up. Pull it up once again and you would see the IT names, TCS, Infi, HCL Tech, are shaving off close to about 40 to 50 points off from the Nifty. But even those stocks are now seeing an intraday pullback. So pull up an intraday chart of an HCL Tech or Tech Mahindra and you would see an upward sloping move.
Yeah. Well, that's right.
Boy.
Well, that's right. The intraday low is around 17,713. Yeah. We went out there a couple of hours ago and we've seen a good recovery of close to around 80 points, as you mentioned. The Nifty Bank, that's the one that's showing strength, and that's offsetting all the negative work that's been done by these tech names. So the Nifty Bank, well, it's gaining good momentum, and now it's crossed yet another technical barrier. That's closer on the 100 DMA, which we were tracking earlier today, of around 41,710. So we're 200 points higher than those levels, and the Nifty Bank is the one that's helping the Nifty move ahead. On the Nifty, well, we have expiry that will be playing out in the next 55 minutes or so, since it's weekly expiry. And I've picked up two strikes to track today. One is a 17,800 call. At the start of today, the premium was closer to around 50 rupees. So your sense is there is some writing being seen out there. You add around 40-50 rupees to around the 17,800 odd mark. That's telling you 17,840, 17,850. That's a bit of a resistance zone. On the downside, though, 17,750 put, that's seeing some writing. Even when we went to the low point of the day, well, we did see that there was no unwinding out there. So the sense is that that recent low, that's today's low of around 17,730 to 17,750 should hold out. So you've got your broad range out there. Let's bring it up for you on the screen. That's the range you're working with. If in case we breach this range on either side, we could easily see a 50-60 point move in either which direction. So let's see how this goes. But for the time being, it appears we're in that band of around 100 points hot, Surbhi.
Absolutely, but this is something that you can't really, ignore, the kind of pullback that we've seen from the lows, because it's not happened on the back of any major global move. There's a little positivity on US futures right now, and let's pull up some of the European markets. There's mild negative over there, because remember, the market right now in this pullback has managed to overcome two lows or two negatives, so to speak. One obviously is the disappointment from TCS, and the second is the Federal Reserve minutes showing that the Fed seems convinced there's a recession coming, but the market's kind of moved on completely above that. That's the European market. The futures right now are just mildly positive, 0.2% or so higher. Interesting move considering that we're not trading tomorrow and the rest of the world is. So it seems that we are preempting what could be perhaps the Wall Street action overnight. The mid-cap market is a little subdued. That's the only thing that's missing in this pullback. That wide move that we saw yesterday, it's not as apparent today, though the mid-cap index is now trying to come back in positive territory. The advanced decline ratio is just even, Steven, mildly positive, you can say. About 1,500 stocks on the advancing side, around 1,300 on the declining side. That's a small cap index also trying to bounce in positive territory. So market breadth is not as great as yesterday, but the fact that we have pulled back from the lows definitely telling us the market's mindset, the mood is buy the dip. Yes. And I think that is what has really changed in the last 8 or 9 trading sessions from a sell on rally. Today is telling you this is a buy on dips market, at least as of now.
Okay, that's quite apparent in the way the markets have moved over the last 8 trading sessions. We're getting some import-export data for the month of March, so we'll try and analyze that as well. Here's what we have for you on the show today. After IT bellwether TCS, Infosys will be reporting numbers today. The stock is under pressure. We'll get you the key expectations.
Apollo Hospitals is the top Nifty gainer. The stock is 10% away from its 52-week high. So what is powering this move? We'll tell you in just a bit.
AU Small Finance is surging in trade after the Reserve Bank approves the extension of the tenure of MD and CEO. What are brokerages saying? Details lined up.
We will discuss top sectoral ideas in the market setup with our alpha manager of the day, Aditya Sood of Incred PMS will join in. All this and more over the next 60 minutes.
Well, let's find out what's the trade on the index. Mitesh joins us to help us. How do you position yourself at the final hour of trade? Hi, Mitesh. Buy on dips has worked yet again. You were telling us, in the last couple of days that you've been lightening your long positions. Did you buy today's dip? And how do you view the index at around the 17,800 odd mark?
So, Nigel, good afternoon. We haven't bought today's dip. I think 17,730 is where we got the low. I was hoping we'll possibly get maybe below 17,700, closer to about 7650 was my buying zone. So yeah, still maintaining stop block positions, but on the index, we haven't, been able to get in today. While I think this was a very likely outcome, but the overall trend is still on the positive side. I think we were just discussing the range. I think my sense is that one, in case you get a significant dip, buy into it. I think the possibility of an upside break out are much, much stronger given the fact that the daily and the weekly indicators are all in the rising mode. Add to it the fact that the Bank Nifty, which enjoys a significant weightage in the Nifty, also is extremely strong on the short-term charts and is clearly positively biased. In fact, while the Nifty is negative, the Bank Nifty is about 0.75% up. So my sense is that I think, eventually we'll break on the upside. So trade with long bias. Index, I think, is just a tactical, understanding where you want to enter. Currently, my belief is that 17,650, 17,670 is the area I want to buy into. On the stock side, Canara Bank is something which could be possibly breaking on the upside. So that's a buy with a stop at about 285 for targets of 302. And Balkrishna Industries, we've talked about auto ancillary also comes into focus. So Balkrishna Industries is a buy. Keep a stop just below today's low of 2040 and a target of around 2120 can be.
Mitesh, just a word on tech. Is there a trade at all? I don't know, upside would be too risky, I guess, given the fundamental news flow. And I don't know, downside, is it like flogging a dead horse? Basically, can you trade IT or would you just steer clear?
Survi, I think, given the fact that IT is something, which has been underperforming one and not really showing any strong chart patterns. My sense is that why get into something which is not, clearly the best of the area to explore a long position. So while IT does look very negative to me, it still looks like a range-bound kind of a scenario. The overall belief is that I think, IT stocks may not be the best trading bets in the near term. And therefore, I think it might be better, in case we can look at going long in either banking stocks or other financial names or maybe other stocks, which are clearly showing signs that some kind of significant up move can happen. Yeah, so I'll avoid IT from trading point of view very clearly.
Okay. So no clear chart trends. It's an avoid for Mitesh. Mitesh, thanks. We'll come back to you in about half an hour and take stock of the market again. IT remains in focus, whether or not there's a trade, irrespective. The news flow is really coming in from this part of the market. Now, Rima, all eyes on Infosys. Are they going to scare us even more than TCS did?
I can't say, but let me lay out the expectations there. A dollar revenue growth of 1.3%, constant currency revenue growth of 0.4%, EBIT margin seen flat at 21.5%. So these are the three big numbers to watch. Dollar revenue growth, 1.3%, constant currency revenue growth, 0.4%, EBIT margins flat at 21.5%. But this is what has already happened, right? The key is going to be the guidance. Now, for FY24, consensus was more towards 6 to 8%. But now I think given the downbeat mood from TCS, consensus would be closer to 5 to 7%. So in my assessment, 5 to 8%, a guidance between this broad range, will be accepted by the street, because today anyway the stock has reacted adversely. So I think a 5% number at the bottom end on, in terms of the guidance would be digested from here on. Margins is going to be quite critical. Remember, TCS missed expectations on margins, and the reason is because if your revenues don't increase as you were anticipating, your costs continue to remain the same, and therefore the margin expansion that you were anticipating does not take place, right? So if things are indeed weak and revenue growth starts slowing down, but costs do not come down by a similar amount or more, then the thesis of margin expansion gets, taken away. Currently, consensus is that FY24 margins will be better than FY23 margin because your attrition is coming down, your wage bill is coming down, there is no war for talent. So consensus is pricing in a margin expansion, and you need to see that in the margin guidance. Right? So the consensus is that the upper end of Infy's margin guidance band will be raised. Currently it's 21 to 22%. It will go up to 21 to 23%. These are the numbers on the guidance. Apart from that, watch for commentary. BFSI has been in the eye of the storm. BFSI for Infosys was anyway, weakening before even the regional crisis took place in the US banking systems. So BFSI is going to be one. Is this a pause in discretionary projects very widespread? TCS spoke at length about it, and they said that, banking clients are, going in a cash preservation mode, capital preservation mode, and therefore they're, paused some of the non-essential projects. So I think, commentary from Infosys, if it confirms what TCS is saying, then the street is going to be quite jittery about the rest of the IT pack as well. And finally, Infy has faced a bit of an attrition problem below the CEO line. Two presidents have moved on to becoming the top bosses at other IT companies. One is Cognizant and the other one is Tech Mahindra. So filling in those shoes will be important. So that's the key expectation. Remember, we've got the Infosys managing addressing the media at 4:30 p.m. on their earnings release. So keep it with CNBC-TV18.
All right, Rima, I'm just wondering whether, for the time being, the positioning is clear, right? The street is expecting a very weak set of numbers coming in from Infosys. But as you said, the stock has done a relative underperformance. Just year to date, it's, I think, a 6 to 8% underperformance from Infosys in comparison to what the IT index has done. Yeah, that chart is up for you on the screen. So I'm just wondering whether something positive can come about since the street is so negatively positioned. Maybe these numbers are disappointing. Maybe you see a bit of a downtake on Monday, but from then, what do you see? Because plenty of that has been factored in the stock price, unless it's a real howler.
So I think, Nigel, to your point, the TCS management has sounded so cautious that if Infosys comparatively doesn't sound as downbeat, as uncertain, maybe that itself could be a trigger for the stock.
And Rima has educated us over all these years that, the valuation comfort is there with Infosys for a good reason in comparison to TCS as well. But from a Nifty perspective, Infosys is way more important than TCS. Why? Because you have 6.5% weightage on Infosys. TCS has close to around 4.2%. So it's nearly a 50% higher weightage that we have. In case we have that data point, maybe we could pull it up for our viewers as well. But we've said enough. Let's get in Gurmeet Chadda. Good afternoon, Gurmeet. I'm sure you're getting set for a nice long weekend. But before that, IT numbers coming in thick and fast. What are you making of TCS as well as Infosys? What are the expectations? And from the large cap IT names, what do you like?
So, Nigel, I think some of the negativities in the price, and that's the reason there is the visible underperformance. If you see Infosys, it's down more than 20% from the peak. So is the case with TCS. But one thing which we have to do probably is to look at level 2. This will be a year of differentiation. Clearly there is slowdown in North America, which is the major geographical area. BFSI is almost 30% of revenues for the larger ones like TCS and Infy. What I liked in the TCS thing was the number of deals they did, which were 50 million plus. Those were at a record number. The deal awards were pretty good for Q4, $10 billion, and the overall, I think, strong, which gives you some near-term, revenue visibility. They anyways have a good cash conversion. Also on the hiring front, they continue to probably hire another 45,000 odd, which further reinforces. So my sense is that only when things are extremely negative, is when you get good value. There could be near-term pain, 1 or 2 quarters. I agree, something may not happen in the immediate basis, but in my view, a lot of it is in the price. We'll probably now wait for Infosys and see that if it's reflecting what probably TCS said on the call, which is some delay in decision making, some reprioritizing of spends, and these things change very quickly. We've seen that even in the COVID period, right? And our large companies, especially Infi, and TCS, they're very good in vendor consolidation, ability to control input costs. So they actually strive, when the going gets relatively tough, and whenever there is a bit of an upside.
Would you buy TCS then? You said it's best to buy when things get excessively negative. Do you think TCS at current price is pricing in a lot of negativity? And if you have a 1-2 month or 1-2 quarter period to digest some more pain, is this a good attractive entry point?
See, despite the correction, Rima, it's still 20 times FY25 earnings. It's not really cheap. But I think Infi is more reasonable in valuations. But so we'll have to see how the commentary goes like. Similarly, as I said, there are a lot of niche plays. We've seen that, for example, in the ERD space, for example, KPIT doing really well despite the JP Morgan downgrade and just a 2-3 day hiccup. They continue to sign new labels. Also, a lot of other companies like HCL is 13-14 times earnings. So I think the valuations are very reasonable. And maybe, what we have seen is 15-18% top line growth that will moderate to maybe high single digit or maybe early double digit. But this, if you take a slightly 3, 4, 5 year view, I mean, instances like these have happened. And this is not as discretionary what IT used to be a few years back. So in fact, somebody made a very interesting point. IT is more horizontal now. It's no longer a vertical.
Okay, Gurmeet, stay on. More questions coming your way. We've discussed a sector that's downbeat. Let's talk about a sector that's done really well this week, especially the last 2 days, and I'm talking about healthcare. The stock that we're focusing on from this entire pack is actually Apollo Hospitals, which is up about 2% right now. It's done well for the week. It's up about 5%, and it's not too far away from its 52-week highs as well. So what's powering this move in Apollo Hospitals? Let's ask Ekta. Ekta, the sector has been, quite healthy, so to speak, this week. But any specific triggers for Apollo?
Well, there's a lot of, multiple news pieces which are probably aiding Apollo Hospital in today's trading session. So I'll just start with a couple of statistics. The stock, remember, is 10% away from its 52-week high. It's one of the most expensive hospital stocks currently at around 22 to 24 times FY24 EV to EBITDA. Now, reasons for the up move, one of the reasons is basically the Manipal Temasek deal, which in fact took place at a premium at around 10 times FY22 sales. If you look at the same parameter for Apollo Hospitals, it's at a significant discount at around 4 to 5 times FY22 sales. And hence, there is some amount of room when it comes to an up move in terms of valuations compared to the Manipal Temasek deal. Q4 earnings round the corner, and that could probably surprise on the upside versus estimates of a flattish quarter. So the street is currently going with occupancies of around 64% versus 65% Q-on-Q, but the street is anticipating that there is room for upside in terms of what Apollo could deliver. COVID-19 is on the rise, so India has reported over 10,000 fresh cases of COVID-19 in the past 24 hours, and a lot of the hospital diagnostic companies tend to react to those numbers. Now, other triggers which we need to watch out for Apollo, especially when it comes to their Q4 numbers, includes the margin improvement on a Q-on-Q basis that had fallen to around 12% in Q3. The EBITDA was dragged down by one of the highest investments that they've done on a quarterly basis for their digital business. And talking about Apollo 24/7, the costs in fact were around 200 crores in the previous quarter, and Apollo Healthco, which basically houses Apollo 24/7, reported a net loss of around 63 odd crores. And fundraising with regards to the digital business is something that the street is going to look out for quite closely. So these are a couple of triggers to watch out for. Separately, there is buzz of a Mumbai-based privately held diagnostic company being on the block. So there is, obviously some amount of interest that Apollo Hospital could be in the fray for that.
Okay, so there's lots happening in the sector and specifically with Apollo. Thanks, Ekta, for rounding up all the action. Gurmeet, so, whether it's hospitals or whether it is pharma stocks, yesterday it was all about Divi. The market got so excited thinking their X of COVID business, the Molnupiravir business, maybe that's doing really well. You tell me, do you see sustainability in any of these moves? Are you buying Pharma? If yes, which stocks? I don't know if Apollo makes the cut, for instance?
Apollo has been on our radar, and I think they've done very well. So Ekta mentioned about 65% occupancy was the case in Q3. They guided almost 70% for Q4. We'll see how the numbers stack up. If you see the average revenue per occupied bed, it's one of the industry leading at almost 55,000 rupees. The pharmacy business grew 5%. That started doing like 600 crores. Even the GMV in the digital platform, which is 24/7, it has been up, and they've been investing on that, which obviously is also leading to some near-term compression in the margins. We saw a 1.5% dip there, but valuation-wise, very expensive should be right now. I mean, 80 times on a trailing basis and 55, 60 times. We've seen that when you give those kind of multiples, the near-term results can be subdued. But overall, if there is price correction, definitely, I still think there is merit in API and the CDMO space. The March data actually showed an uptick in exports. So Divi's, for example, was almost $92 million in March. We saw that in Laurus at almost about 25-30 million. And if you see last 1 year, in Laurus case particularly, the custom synthesis business has really done well. The dependence on ARV API is down. Valuations are far more reasonable. So there is risk reward, but this business is lumpy. If there is, if there is no more commercialization of molecules every quarter, you could see a delayed, and a lumpy recovery. But like in IT, as I said, see anything which is out of favor where there is maximum negativity, and if business is fundamentally good, Divi's has been around for more than 3 decades. Same is the case with some of the other names. So you have to slightly, if you are slightly strong-hearted, I think the risk reward is pretty good.
Do stay on. Need to get into a very short break. When we return, we'll also chat with our Alpha manager for the day, Aditya Sood of Incred PMS.
All right, we are focusing on stocks that have made it to the headlines today with some pretty interesting price moves. And AU Small Finance Bank is definitely one of them. It's been holding up between 13%. Last I checked, was up 16%. Make that 17% now. What a move on AU Small Finance Bank. And this because the Reserve Bank of India has approved the extension of the MD and CEO's tenure. Let's take it to Ritu to understand what the RBI said, if this is a complete clear approval, and why the street is so excited about it. Ritu?
That's right. RBI has approved the reappointment of Sanjay Agarwal as the MD and CEO of AU Small Finance Bank for a 3-year period until April 2026. And the tenure here is very important. Remember, the board had already approved Sanjay Agarwal's reappointment in January last year. In addition, RBI has also approved the reappointment of Uttam Tibrewal as the whole-time director of the bank for another 3 years. Now, what this does is it removes a big overhang on the stock, because in the context of the 1 or 2 year renewals that have been granted by RBI in some recent instances, take IndusInd Bank CEO's case, for example, this 3-year extension for AU Small Finance Bank CEO is definitely a positive outcome. So Kotak Institutional Equities believes that the fresh development addresses a key discussion point for investors, and now the interest is squarely going to shift back on the bank's operating performance. AU has been indicating strong trends in collections and asset quality. Advances and deposits growth has also been healthy. Now, Morgan Stanley is overweight on the stock with a target price of 860 rupees. It expects the stock to stop derating given the full tenure extension and a peaking of the interest rate cycle. Going ahead in the next few years, it sees a strong re-rating of the AU stock. Citi has a buy rating on the stock with a target price of 740 rupees. It said that RBI's approval reflects a stance of confidence and expects the stock to unwind and see improved visibility of the bank sustaining 1.9% return on assets.
Thanks a lot, Ritu, for explaining that to us. Gurmeet, what do you make of this piece of news? 17% in a single session. That stock has done very, very well. And on the flip side, you had IndusInd Bank that was down 4.5% to 5%, an overreaction on the downside because their MD and CEO got an extension of only 2 years. And the last time someone got an extension of 2 years was RBL Bank. But that as well has recovered a good 7% from the low point of the day. Any view on both of these stocks, IndusInd Bank or AU Small Finance Bank, or do you all prefer some other banking names?
So, Nigel, the key risk is always Sanjay Agarwal has built it, from scratch. The way EU has grown has been Rajasthan-centric and now, diversifying. If you see last year, they've done significant expansion, adding more than 300 banking touchpoints. If you see last quarter update, almost 26% growth in advances and about 30% growth in deposits. And I've been making this point that watch out for the deposit growth. I think it's going to be a liability war now, with HDFC also, upping the tempo to meet the various regulatory norms. But trades at more than 3 book value on a forward basis, and this market when interest rates are still high, while the there is a pause, but we don't know when the downward trajectory will start. Paying more than 3-4 book multiple. We've seen that even with Kotak, great franchise, but if you pay a 5 book multiple, we've seen a 2-3 year. So it's about the discounting rate you give at different points of time. I think there are better, while it's a great franchise, and they're done well, I think there are better opportunities. I still think somebody like an Axis ICICI on the private side, SBI on the PSU side offer better risk reward. Similarly, a couple of NBFCs, I think, NBFCs is one thing which not really moved the way banks have. So maybe a Chola, Poonawalla, FinCorp, amongst the smaller ones, I think offer better risk reward.
Gurmeet, thank you very much for joining in. That's the view coming in on a whole host of stocks. Look at the banking stocks go. The Nifty Bank has climbed even higher now. It's a 520-point rally. When we started the show at 2:30, the Nifty Bank was up 350, 400 points. From that level, it's added on some more weight and now well above the 42,000 mark with a gain of 1.3%. All the individual private sector large banks are higher in trade. HDFC Bank is up 0.3%. You've got ICICI Bank gaining over 1%. Axis Bank has surged 1.5%. ICICI Bank too, giving it company in the 1% plus camp.
Just pointing out that the move right now the market has made, we are at yesterday's high. And we still have a good half an hour to go. So again, there's a huge amount of momentum that we've seen from the lows of
Pretty remarkable, the kind of intraday recovery that we've had. And this is a market which has anyway rallied so much, right, in the last 9 trading sessions now. Looks like, look at that intraday spike, right, on the Nifty.
I'll just chip in with one more data point, Rima. On the 20th of March, you know, we were at around 16,828. 16,828. Now we're at 17,828
exactly
approximately.
1,000
points from the 20th of March is the kind of move that we've seen. Fabulous move, yeah. Bang, 1,000 points. We've got it. Yesterday, I think we stopped a little bit short. Let's see whether or not we can hold on. And given that you have that expiry-related factor as well that's playing out, that could take us a little bit higher from here. But that's all on the Nifty Bank, because if you're looking at the short positioning, a lot of short positioning has got covered out, but that was on the Nifty. The Nifty Bank stocks, they appear they're still stuck in the system.
Okay.
Which is the reason why, in fact, we are seeing some strength.
Yesterday, what was the short
The net
position?
short position, Rima, if you look at it, you have, the net short, that is the short positions of the FIs and the long positions. So short minus long. At the start of the series, it was 1.4 lakh contracts.
Okay.
As of yesterday, it had come down to 42,000 contracts. So there's close to 99,000 of short positions that have got covered out in the last 2 weeks, because the contract is only 2 weeks till now. I mean, the start of the April series. So that's the benefit of having a net short market. You know, because
squeeze higher.
Squeeze higher. You have the RBI governor that went ahead and did a pause out there. The street is factoring in that the worst in terms of rate hikes are behind, at least domestically. And maybe even the Fed, maybe we've got one more rate hike out there. So net short market has helped us, in fact, do this quick 1,000 points.
Yeah, it's about the macros, right? Because micros, if you look at the earnings season or TCS, for instance, has been disappointing. Yeah. But it's just the big picture in terms of inflation receding in US, receding in India, and perhaps we're closer to the end of the rate hiking cycle. But there's one more sector and a few stocks that we wanted to discuss, and that's autos. Eicher Motors and Ashok Leyland are also surging in trade. Today, Goldman Sachs has initiated coverage in these stocks. Sonia's here with more on that. Sonia.
Well, at the onset, I just want to mention that, the auto stocks have been the big movers both this week, this month, as well as this year. So if you look at it, names like Tata Motors, Bajaj Auto are all up about 20% for the year. And a lot of brokerages have written positive notes on this space. In fact, Goldman Sachs, as you rightly pointed out, has written a note this morning where they've initiated a buy on Eicher Motors. They have a target price of 3,660. Now they say that over the next 5 years, Eicher Motors has the least amount of impact because of the electric vehicle disruption that the industry is facing. They say that Eicher has given a longer R&D cycle and a higher bar as far as specifications are concerned for premium electric motorcycles. So it is sort of in a league of its own and may not get impacted by the EV disruption that we're seeing. The margin dynamics are also favorable from improving 650cc mix with international market expansion. Also, they have a low sensitivity to higher interest rates, so they won't be impacted too much if interest rates continue to move up and that continues to impact demand. They also speak about how one of the big catalysts include the improvement in the international business. There are 10 new products in the pipeline. The response to some of their new products like the Hunter 350cc has been very good. The Super Meteor 650cc and the rural market launches have also played out quite well. Let's move on to Ashok Leyland, where Goldman Sachs has initiated coverage with a neutral target, stance, and they have a target price of 140. Now they are a bit cautious. The reason for their neutral stance is they say that the fast growth in the commercial vehicle sector in the past few years could start to normalize now as we enter the mid-cycle phase in the Indian CV market. Although they expect a normalization of the growth, they're still looking at a 25% EBITDA compounded growth for Ashok Leyland over the next 3 years, driven by a steady progress in the LCV business. And finally, they talk about how the company has plans for some new modular range as well as an alternate powertrain. All of that could lead to further upside in the business. Back to you.
All right, Sonia, thank you very much for bringing us those views. Indeed, those stocks have done very, very well this week. Well, let's take the conversation forward with our alpha manager of the day. Aditya Sood of Incred PMS is with us. Aditya, thank you very much for joining in. Actually, if I remember correctly, you folks had a house call which was quite optimistic on auto stocks. I don't know if that's still the case or not. But let's start with that sector, because indeed it has done very well at a time when there are still some concerns on monsoons, on rural demand. But that hasn't stopped these stocks, even the two-wheeler stocks, from revving up big time. Your views?
Yeah, so I think so. We continue to be, fairly constructive on this space. Reasons are very evident. One is the element of, cyclical recovery. part of which we have seen play out. Second element obviously is going to be the raw mat inflation for most of these companies, and we would see some a bit of gross margin expansion. Obviously, freight has to be looked at very critically in most of the companies that we are analyzing on a bottom-up basis. What we have seen is that as inflationary pressures sort of have peaked, freight cost would play in favor of a lot of these companies. Another element that we are seeing, and what we are hoping for going forward, and we are very constructive, is a rural recovery. And what we are seeing is that there are initial signs of rural. There is a very good probability of rural, sort of recovering. And a big element is going to be twofold. One is the balance sheet repair, obviously, because of higher gold prices. The second thing is that we are obviously getting into election year. Thirdly, I think the infrastructure side of the spending is going to be helpful because it helps to generate income for a rural economy, as opposed to what we have seen post-COVID in terms of subsidies. So we continue to be fairly constructive on the auto space, particularly on companies which have got a good rural exposure.
Aditya, what gives you confidence about the rural recovery? What are the data points that you have liked, and where is it that you're seeing these green shoots?
So typically what we have experienced is that, obviously there is last year you didn't see too much of food procurement from the government, because the prices were elevated. Secondly, ahead of the election year, there is a fair probability that, you'll have a hike in MSP prices. Thirdly, I think we are at a very early stage of companies, FMCG companies now giving a positive commentary on rural India, wherein rural obviously was under significant distress. The urban side of it, obviously the discretionary has taken a knock in the sense that we have seen EMIs being slightly higher, which has resulted into discretionary spend being curbed. But what we have also witnessed there is that the trends are mixed in the sense that we continue to see very high ARRs as far as hotels are concerned. We continue to see very high traffic as far as airlines are concerned. Obviously, the discretionary end of the one end of the spectrum is doing well. Secondly, what we have also seen is that some of the same store growth of a lot of the QSR companies has been suffering. So what we believe is that in a trend line sector wherein the growth is fairly predictable from a 3, 5, 10-year perspective, you get this chance of buying into companies wherein there is a temporary aberration. So what we expect going forward is that the QSR companies possibly over 2 to 3 quarters time is going to be accumulation time, because what we have seen most of these stocks being beaten down in the sense that most of these stocks have declined to the extent of 50 to 60% from their peak prices, and valuations are obviously much more reasonable than what it was in the past. So that is one.
Yeah, go ahead.
Yeah, hi, sorry. So that is one bucket that we really like, in terms of incremental positioning from a 2 to 3 year perspective.
All right, QSR space, right?
Yeah, that's correct.
All right. Hi, Aditya. Nigel on this side. Aditya, you were speaking about this rural recovery. How do you play it? FMCG names, the two-wheeler bikes, what is it you're looking at?
Yeah, so essentially, obviously all of us know that, Maruti is fairly strong as far as rural plays concerned. There could be second derivative plays like obviously Bharti being one of them. Thirdly, obviously Hero Honda has been a big underperformer. Obviously they have a large skew towards entry-level bikes. Then there are various ways to play through, agri input names as well, which we are turning fairly constructive upon, because what we have seen is that, quality agri input companies have, not performed well from a 4 to 5 year perspective. So that is what is of interest to us.
All right, Aditya, just one more quick question on the tech space, since that's in focus today. The street seems to be a little bit spooked by TCS's numbers and the commentary as well. What's your view out there? I think you all had a couple of mid-cap stocks that you liked out there. How do you approaching this space?
So we are, we are fairly. We believe that this is a year wherein, tech is going to be in an accumulation zone. One thing that we have seen in a lot of great companies, and this is a sector wherein obviously balance sheets are very, very clean for most of these companies. What we do believe is that, if as long as these companies are gaining market share in a down cycle and valuations are much more reasonable, they will emerge much more stronger in the subsequent upcycle. So the way we are narrowing down in this sector is that, obviously we have a very positive stance on engineering, research and design as a segment within the tech space, because it is a fairly long cycle manufacturing sort of a culmination here. So we like engineering, research, design companies. Secondly, we do also like a combination of value companies in this space. Wherein obviously, among the top 4 companies, what we have seen is that, HCL Tech is a good dividend yield play. As we look at today, essentially they have a very high payout, and what would help them sustain over a period of time is, or where the stock is finding support is at a 4% sort of a dividend yield sort of a number. So we are fairly constructive on this space. I think so. What is heartening here is that, one should focus on the deal pipeline. And what we have clearly seen is that, deal pipeline continues to be very, very strong for a lot of these companies. And obviously, TCS has also indicated that there is going to be a slight skew towards hiring more freshers versus laterals. But they will continue to hire, for more than 40,000 odd freshers for this year as well. So that leads us to believe that, and these companies are very, very good in terms of, managing cost levers. And so
all right.
What we believe is...
Yeah, Aditya, if you could name a couple of companies that you all could be having. I mean, you've given us a description of what you like. You look at track the order book, you like ERD companies. Could you give us a couple of names that you all already hold?
So we have exposure in Expiry Solutions. We also have exposure in Tejas Networks, which is a telecom equipment manufacturing play. Basically, so these are the companies that we hold in the portfolio.
Always good. Always good hearing your thoughts, Aditya. Thanks so much for stopping by. A short but crisp discussion is what we have had out there. Constructive on IT, looking to play some of those rural themes, and maybe the QSR space for the next few quarters are providing a good entry opportunity. Let's slip into a short break, but on the other side, Nimesh is waiting for us. He's going to tell us what he's picked up in terms of dealing room chatter, and we'll also get our technical analysts back with us. The Nifty Bank, that's the start of today. The Nifty IT index is under some pressure, and the Nifty Bank non-stop. 42,100 is what we have at current reckoning. But it's time for our favorite segment, D-Street Chatter. Nimesh joins us to run us through what he's picking up. Nimesh, what a good rally we have seen, and it appears that unbeaten run will continue even today. What are you picking up?
Hi Nigel, it looks like this unbeaten run can continue, but a bit of consolidation throughout the day. But the good part is, even in today's trade, there is good amount of buying interest, and I believe there is a basket buying as well at a leading FI desk. So this move in the last few days is largely backed by FI buying. So that's a good part. Again, today the day is for financials. A big move in the financial names, even in today's trade, and there is buying as well, from the larger FI. So that's overall feedback as far as the financials are concerned. So on the other side, a bit of selling in the IT names continue. We have to watch out for the Infosys number today. The thesis is a bit soft, but Infosys will be important to watch out for. But again, within IT, the feedback is let's not brush the entire sector with one or two results, because there will be some winners as well within the mid-cap IT. So that's the overall chatter within the dealing rooms. I guess within the financials, watch out for the HDFC Bank numbers this weekend. And ahead of the numbers, the overall feedback is there are some large long-only funds who've positioned on the buy side buying into HDFC Bank. So even that number will be very important as far as the Nifty Bank is concerned on Monday morning. So that's something to track. I guess from a technical point of view, the next resistance is 17,850, 17,900 levels. That's need to be watched very closely. But while we've seen a big rally in the last many days, there is the sentiment is still a bit skittish. So people are not going outright and buying into the large cap names or the mid cap names. So there is a bit of skittishness, and maybe that's the reason why it may surprise the markets may continue to surprise on the upside. That's the feedback. But the good part is, even in today's trade, the rally is largely backed by FI buying, and there is basket buying at a leading FI desk in the large cap names.
Okay, so that's the overall shape of the market. By the way, I was just looking at levels, considering where we are trading, and we've taken out yesterday's highs. These are the highest levels we've seen since the 21st of February. That's the extent of this pullback. 9 days of pullback, continuous and very, very strong. And the market now has gone back to levels where it was towards the end of February, undoing a lot of the damage that we saw in the month of March. So Nimesh, given that that's the sentiment, and you mentioned that, buyers are alive and kicking, tell us about stocks. Where's the action?
Well, in terms of individual names, the first stock on my list today is Campus Activewear. After a long time, some bit of buying traction is back. So that's the reason why the stock is buzzing as well, and on good volume. So looks like some of the long-only fund interest is back in active Campus Activewear, and hence a big move in that stock today. So that's the first one. The second stock is ICICI Pru Life. Now that has corrected from days high, but I believe some bit of buying traction is back in the insurance names, and ICICI Pru Life, after a very long time, seems to be on the buy list for some long-only funds. So again, there is a bit of interest back in buying into ICICI Pru Life at these levels. The third stock is Unichem. Now this is going to be interesting. Quite in trade today, but off late the stock has been buzzing off late, and again the street is anticipating a corporate development very, very soon. In fact, this is something to track, maybe, and something can come early as next week as well. That's the overall feedback. So Unichem needs to be tracked closely as far as corporate development is concerned. And the last stock is Zee Entertainment. In a good market, that stock is under pressure today for two reasons. One, I believe there is a NCLT hearing which is currently underway, so that needs to be tracked very closely. And also next week on April 18th, the 180-day lockup for Oppenheimer ends, and they can sell further. Remember, they still owns 5% stake in Zee Entertainment. So because of that supply overhang, there is a bit of softness in Zee Entertainment in today's trade.
Thank you very much for that interesting list. Zee Entertainment is down close to about 2% odd. Let's welcome Mitesh Thakkar back again. He's going to give us a few BTSD trading calls. Mitesh, strong has only gotten stronger, particularly the banking stocks. Thoughts on what we've seen so far in the last 30 minutes and your BTSD calls?
So I think, yes, I think, remember the overall bias still remains positive. And I think I was mentioning that the Bank Nifty still looks like to be the index in an outperforming mode. And I think that's the reason why the Nifty has kind of come up very nicely. And therefore, I think, trade on the long side, though I think on the Nifty, we don't have any long positions, would want to see some dips to buy into fresh. But otherwise, on the stock side, we are trading with all long biases. And I have right now HDFC and HDFC Life as two BTSD calls. HDFC can be bought with a stop at 27.70 for targets of 28.10. And HDFC Life, that's a BTSD with a stop at about 526 and a target of 542.
Okay, all right. Thanks a lot for that, Mitesh. Well, talking about the HDFC Group, we'll be getting some important earnings to track over the next few days. HDFC Bank, that'll be reporting its fourth quarter numbers on Saturday. Abhishek's going to have a busy weekend. Abhishek, tell us what to expect from these numbers.
Well, HDFC Bank will be reporting its numbers on Saturday, and Street is anticipating the best NII growth on a YoY basis in last 31 quarters. We already have the business momentum for Q4 FY23, wherein the deposit momentum is robust. On a YoY basis, they are the best in last 11 quarters, coming in at nearly 21% growth. And on a sequential basis, they are the best in last 20 quarters, coming in at 8.7%. The loan growth on a YoY basis at a little under 17%. Is perhaps at a 5-quarter low, but sequential loan growth of 6.2% is perhaps the best in last 4 quarters. The CD ratio or the credit deposit ratio is at 8-quarter low of 85%. However, the CASA ratio has remained stable and improved on a sequential basis. So ex pool, the loan growth is about 17% YoY and about 6.23% sequentially. To watch out for the NII growth, that will be on a stronger side. So net interest margin can expand YoY, but it may decline on a sequential basis. Analysts are expecting anywhere between 5 basis point to 10 basis point decline in net interest margin on a sequential basis. Slippages are expected to be at 6,000 crore as per Phillip Capital estimate. Remember that in the previous quarter it was at 6,600 crores. Kotak Securities is estimating operating profit growth of 12.6% YoY and a decline of 3% sequentially. While in this, a large part could be played by the fact that OPEX could remain elevated. Credit cost or provisions are likely to remain under control or moderate from the previous quarter. Asset quality to remain stable or improve quarter on quarter. We'll watch out for any impact from the unseasonal rain on the agri portfolio. So our poll suggests NII growth of 25% on a YoY basis and about 2.8% sequentially. We are working with a profit growth of nearly 21% YoY and a decline of a little under 1% on a quarter on quarter basis. Back to you.
Okay, all right. Thanks a lot for that, Abhishek. That's going to be the big number that's coming out. Remember, today, if you count Infosys, TCS, as well as HDFC Bank, between the three, the weightage on the index is 21%. So you already have, TCS that's a little bit lower. Infosys, the street is not going with great expectations. And HDFC Bank, at least it's holding mildly in the green. Sudeep Bandopadhyay joins us. Hi, Sudeep. Good afternoon. Thanks so much for joining in. Well, what's your preference from the banking space? And what about HDFC Bank? Well, it had a bit of a lull in the middle, but that's bounced back in style. Your take?
Well, HDFC definitely, Nigel, is one of my favorites. And, we have seen HDFC getting a valuation much lower compared to what ICICI and SBI. Remember, HDFC always used to quote at a premium vis-a-vis ICICI, Axis, and others. Last 1.5 years, HDFC has lost that sheen. And, there were multiple things why they were not getting that premium over the peers. But I think they are coming back, and they're coming back in a big way. We expect a good quarter from HDFC Bank. And definitely HDFC Bank at current levels can be bought by investors who have, let's say, 1 year plus time horizon in mind. Other bank which we like is again down and out even today in the Sind Bank. There are multiple reasons. The CEO got 2-year extension vis-a-vis 3-year, which AU Small Finance Bank CEO bought, and things like that. But I think fundamentally the bank is doing good. It's a strong bank, and the performance parameters also are improving. So, taking the opportunity of this correction, somebody can buy, provided they're a bit aggressive. HDFC Bank probably is a buy for a less aggressive investor, whereas IndusInd Bank is a good buy for an aggressive investor at current levels.
Okay, that's about banks. Got some more questions for you, Sudeep. Do stay on. Need to slip into a break. We'll come back and we'll also get in the closing rates then. It's more than 100-point recovery now from the day's low, and the markets are marching on to close higher for the 9th consecutive day, and the Nifty is well above 17,800. This has turned out to be a strong session, and the SIP inflows into the Indian markets while mutual funds continue unabated and at very strong levels. 14,276 crore is the SIP inflow for the month of March, a pickup compared to the prior month. Sudeep, in the last 8-9 trading sessions, when the sentiment in the market has turned completely, have you been buyers in any stock, and if yes, which ones and why?
Well, I think we have been recommending buy in a lot of these infra names, and some of our investors have been buying there. Whether it's an L&T or an NCC, we have been recommending buy, and we believe there is still a lot of steam left. Also, Titagarh wagons have been one of our favorite stocks for some time. We know what's happening as far as these new generation rail coaches are concerned, and I think Titagarh wagon is going to play an important role along with some of the PSUs like electronic manufacturing part of the PSU basket. So I think that's one area. The other area where we have been actually recommending buy for investors with long-term horizon has been the IT. We know what's happening with IT. We know the challenges in TCS and probably with Infosys as well as far as North America is concerned. But we believe these are short to medium-term challenges. If you look at a 1 year kind of a time horizon or 1 year plus time horizon, I think things are not too bad. And I think it was very clear from the TCS management commentary today, and we did watch it on your channel. They are clear that there is some postponement because of what's happening in US and what happened to the mid-sized bank issue. But these are not cancellations, and US recovers pretty fast. The response time to multiple action in US is very, very swift. And we believe that with inflation also coming down in US, the question of Fed continuing with the interest rate hikes and economy continuing to remain under pressure may not be the case. Maybe another 25 basis point, and if that is the case, I think things will start looking different probably after the second half of the financial year for US, which is the calendar year in our case. So I think with that view in mind, we've been recommending buy in TCS and NP, and we stand by that call.
Okay, so being a contrarian and going and buying the stocks when at least the headlines have not been the most optimistic. All right, Sudeep, good talking to you as always. Thank you very much for joining in. You enjoy your weekend, and we'll look forward to connecting again soon. Well, on that note, we are down to the last 2-3 minutes of what has been a very, very powerful day. And don't go by the last number that you see on the screen. That 17-point move on the Nifty doesn't tell you the story. The story lies in the intraday move and the manner in which this market literally fought back, and the bulls wrestled the leadership away from the bears once again. So what we've seen today is a recovery taking the market above yesterday's high, and also a second day where the market has managed to close above the resistances of that congestion zone that we were speaking of 17,800 thereabouts. As Nigel mentioned, it's a very powerful move. 1,000 points from the 20th of March when we had made those lows of around 16,820 odd, and a pretty widespread move. Though, of course, today it was led largely by banks. A stunning move really by the bank Nifty, almost 1.5% higher. But overall this week we've seen a lot of buying in autos that continued even today. So some of your top leaders include names across financial, healthcare and auto. IndusInd Bank in pole position, 2.5% up. HDFC Life, Eicher Motors, Apollo Hospitals. There is Axis Bank, Bajaj Finserv. So a lot of these names more than making up for the decline that we've seen on the IT side of the screen. Now, by the way, Infosys very nervous ahead of those numbers, down 3% as we're getting towards the closing bell, guys. Well,
that's right. Surbhi, and from the broader markets, there were plenty of stocks that did very, very well. AU Small Finance Bank was the star of the day, was up close to around 16%. And a couple of other names as well did pretty well. TVS Motors, one of the most expensive stocks from the two-wheeler space, or the most expensive, but they're giving growth. They're making good amount of penetration, increasing their exports as well. The street likes that, so that one was up close to around 2%. The other couple of gainers included the likes of TVS Motors. You had Union Bank, RBL Bank, both of them did well. On the flip side, some of the stocks that did very well yesterday, they gave back some losses today. So Lotus Labs was under some pressure. You had PFC as well that was down a little bit. Infosys as well did come with some profit taking, and Shobha as well. But you have to say, what a good session it was. 9 straight sessions, winning streak.
Absolutely. A good session minus technology, right? It would have been a lot it would have been a lot better if IT had also participated, but the Nifty IT index ended with a cut of 2%. Right, that's the kind of underperformance. And large caps, of course, sold off, but even mid cap, LTI Mindtree down nearly 4%, Persistent was down 3.5%, Infosys, Cyan, Birla Soft, across the board, you had steep losses. So it was a tale of two cities, IT on the way down, banks on the way up, but the banks prevailed and the markets rallied on to close higher for the 9th consecutive day. There goes the bell, and it's a close above 17,800, and the Sensex as well, closing above 60,400. It's a wrap on Closing Bell from the entire team. Thank you for watching. We get you our Thursday special. Big deal. Stay tuned.